Welcome back, friends. I am joined today by Casey Oynes and Colin Tipp with Guild Mortgage, and we're going to talk about VA loans in Washington State. We've got a bunch of questions to ask these guys, and VA loans are their own kind of animal, but they're a great program for all of our veterans and active service members. So definitely worth talking about, especially around here with as many bases as we have and veterans around here. So let's jump right in with some questions. Who is eligible for a VA loan? On top of that, what are kind of the general qualifications as far as getting your eligibility?
Yeah, so who would be eligible for a VA loan would be typically like active duty service members that would be in service currently, people that have retired from the military that now are working, different jobs. Spouses can use VA loans of active or of VA able borrowers, and then National Guard. So there's a lot of different avenues that VA members can take.
And how do they know what their qualification is, or I guess what do you need from them to qualify them?
Typically, we would request a DD service release form, or we look into their active duty, get a certificate of eligibility through the VA portal, and we just check through there and make sure that they're approved and eligible, and check the entitlement amount that they have for a purchase.
Nice. And is that something that you do for them, or do they need to go into their portal and?
No, we do that for them. They need to provide what documents they have. Like, let's say they're in active duty, we would need their LES forms. We need certain things from the client, like the DD-214, but a certificate of eligibility, we check for them with their information.
Cool. And then what are some of the benefits of VA loans versus conventional or FHA or any of the other programs?
Yeah, I think the biggest benefit is the ability to put zero down, right? And there's no mortgage insurance. So zero down, no more insurance. You actually get the best rates that are out there. It's obviously a very unique and special program, but it's a very, very well-deserved program for our veterans who have done a lot for us. So it's very awesome.
Absolutely. I think one thing too that I want to talk about is just some agents out there and some sellers kind of get this impression that VA loans are not as good as FHA or conventional. My experience is that they're actually better.
I agree. I mean, I think that there's more flexibility when it comes to the approval process, right? And that's because we want to help our veterans out and help them through the approval process. But there's really no, quote, downside. But I think that is a common misconception, especially with listing agents. It seems like that they're like, well, this could be not as good for my seller.
Right. I think the zero down really gets a lot of people. They think it's like just some, helping out or whatever, and it's just an entitlement. It's not, because they can't put anything down. They don't have to.
Yeah. And a lot of our clients have some down payment funds, but I mean, if I could do a zero down loan program and have no more interest, that's right. I would do it too.
Right.
I just don't qualify.
Let's see. And then, so we talked about VA loans, they need a down payment. They don't, but are there situations where they would need one?
There are some circumstances. So for example, you could have a borrower who has maybe a co-borrower who's the veteran, and you can actually make that work from a qualification standpoint, but you need to have a 10% down payment. Mm-hmm. So we actually had like some kids that were buying a house. The dad co-signed as the veteran. We needed to come up with a 10% down payment to make that work. So a lot of people think that, circumstances where they would think that they'd also have to be eligible, but that's not necessarily the case. So
interesting. Okay. Yeah, that's pretty cool.
Yeah, the only reason why anyone, would add the down payment sometimes would be from a debt to income ratio standpoint. Like if they push like above 60% or something, then, because VA goes a lot higher than any program. I've had approval up to 60%. Wow. Debt to income ratio with a VA loan. And so, basically, let's say they're at a 60, the home's $500,000, but they want a $600,000 home. They would have to come up with maybe some funds to, keep the debt to income ratio within approval range.
I think the other thing that's pretty unique about VA loans is the loan limits. There really isn't a cap on the loan limit.
Really?
So, I mean, we've done VA loans, over $3 million with zero down. Now, sometimes when we do that loan, it is kind of more of an exception type of process to like go that high. Right. And if we're pushing, debt to income ratio or FICO score or anything like that, we might require a little bit of a down payment, maybe 5%, maybe 10%, depending on the circumstances. But we've definitely done multi-million-dollar loans with zero down, which is pretty unbelievable.
That's incredible. Yeah. Are there any other programs that give zero down at that rate or at that price?
So there's only loans that do zero down and waive all MI for VA and then doctors. Physician loans can get zero down with no MI too, as well.
So just the
But not into that unlimited.
No, not unlimited. I did a jumbo physician loan, was under 1.5 loan amount.
That makes sense.
Yeah,
that's cool. And then so we talked about that they don't need mortgage insurance, which is great, which also does help with the debt to income too, because you don't have that added into your payment. And then what about what kind of homes can people buy with the VA loan? Are there any restrictions on what they can buy? And what if they want to get like a fixer upper, that kind of thing?
There's no real restrictions. Single family, condo, townhome, manufactured home. It's got to pass some of the inspection processes, right?
Mm-hmm.
It's got to be livable condition,
right?
But there are some, rehab programs available as well through the VA loan program.
Oh, nice. I did not know that. What about condos and HOAs?
Oh, yeah, that was
concerns there.
So the condos, you have to have the condominium complex approved for VA loans. So that's the caveat with the VA condo scenario, is you basically have to have approval to use VA loans within that community. They have to be up to a certain standard for the VA, or they won't lend in there.
And this is the HOA approval is a process that happens beforehand. The HOA does, not something that happens during the transaction.
You can do what's called a one-off spot VA approval. So you could do a condo project that doesn't have VA condo project approval. You can actually do what's called a spot approval. And you can do that for a VA and FHA. It does add a little bit of time to maybe the closing process. So make sure the seller is, okay with that. But depending on the market and what's going on and the competitiveness of the property, that is definitely something we've done in the past.
Very nice. And then now if they do that, that doesn't approve the whole community. It's just for that one purchase, correct?
Yes.
Okay. And what about closing costs? There's been some confusion in the past about what sellers can cover, what buyers are able to cover. I guess the question is, are buyers allowed to cover some of their closing costs? In a competitive market, we want them to be able to take that on. And then are there any restrictions on what they can get as far as like seller paid closing costs?
The restrictions are you can get up to 6% on a VA loan as a seller credit. I think it's 4. It's 4. That part.
Yeah, 4.
The restrictions are that you can get up to 4% as a seller concession towards closing costs. And buyer is allowed to pay for their closing costs. They're not like limited to not being able to pay for their closing costs. There are some specific fees that they can or can't pay for. If the seller doesn't pay for them, usually the lender will end up paying for some of those.
Got it. And then VA loans have a funding fee, which if you're a Purple Heart recipient, you've been released on some sort of disability, things like that, they waive that fee, which you'd be surprised a lot of people have that. And so they waive that. Once that's waived, it by far is the best program offered, because you get zero down, great rates, no funding fee. If you get seller credits to cover closing costs, then it's truly a zero cost loan until your first monthly payment.
That is a beautiful thing, isn't it?
Yeah.
On the funding fee, what kind of amounts are we looking at on that? And is it able to be rolled into the payments?
The funding fee is typically around 2.5% or so.
It ranges from it can be depending on how many times they've used it, from somewhere in the 1% range up to 3% on the high side we've seen. And that entire amount can be added to the loan balance. So it's always, I'd say 99% of the time it's rolled into the loan amount.
So typically just a little extra payment.
Yeah. It's just rolled into the loan for the funding fee a lot of the time. Well, all the time, pretty much.
Nice. And then can your VA loan, your eligibility be used more than once at a time or sequentially, or how does that work?
It can be used more than once. Having two VA loans at one time is also allowed, but there's a certain requirement that we have to go through to see how much of their entitlement is left or available. You couldn't go buy a VA home right now and then next week go buy another one. But we've definitely had some clients that maybe bought a home the following year. They got deployed to Florida and they were able to have some entitlement to be able to utilize a new VA loan down in Florida. So, and then they turned their existing home up here that we did into a rental because the VA is not trying to put people in a position that to force them to have to sell their home in a market that maybe they lose money on. So there's some workarounds there.
That makes sense, especially with the military because they are moving so much.
Right, exactly. I mean, sometimes we have to refinance somebody out of a VA loan to get their entitlement back and put it into a conventional loan to be able to use the VA loan for the new home purchase. So we've worked with people to help them with that as well.
That's pretty cool. And one thing that I've had some clients do this is exactly that. They get their home, they refinance out, they go buy another one. What is interesting is the ones that I've had do it, they keep their existing home, their first home, and rent it out because a lot of times they are in areas where there's a lot of other service members. My last one, they had like a 6-bedroom home in Port Orchard and they just rented out rooms to service members. And it was a great opportunity for them to build wealth after they, were able to get the home with their VA entitlement and then build their own wealth.
Yes.
Pretty cool.
That's awesome.
Well, I think that's all we got for today for VA loans. Thank you guys for joining me, and we will be back for another episode soon.